more than 100 people. Hello, everyone, and welcome to the more than 100 people who are with us today from across the globe, the US, Europe, and Africa. Thanks for joining our discussion on microfinance for women and ideas on how to think about measuring impact. I'm Steve Mark, and I have the privilege of serving as the board chair for Microloan Foundation USA. Our goal at Microloan Foundation is to reduce poverty and provide economic development opportunities for women. We provide financial literacy training, business mentoring, digital financial solutions, and microloans for women in Malawi, Zambia, and Zimbabwe. Over the past 20 years, we've worked with more than 450,000 women and their 1.9 million dependents, enabling us to impact the lives of more than 2.3 million people in those last 20 years. I'm really grateful to be joined today by several leading experts in microfinance, and particularly in the area of impact measurement. We have people joining from the perspective of an impact investor, systems change, overall investment, overall impact measurement, and an on-the-ground service provider. In the conversation today, we'll provide some background on the key challenges facing women in their financial inclusion and the topic of measuring impact and its significance in measuring change. We'll discuss a little bit on how impact measurements are utilized and some of the approaches that are utilized by various players in the sector. So why the focus on women? Women are significantly underprivileged relative to men, even men that are in poverty situation. Over 50% of the women's population, of the world's population, are women, but they own only 2% of the assets. And very significantly for this conversation, the funding for women-led businesses is significantly lower than that for male-led businesses. With that backdrop, there are donors, impact investors, foundations, and others who are trying to close these gaps and, very importantly, trying to understand the measurement, the impact of their activities. It's very challenging to measure impact in some of these areas because there are no credit bureaus, and the typical types of measurements that one might see in the West are generally not available. When you're trying to measure something like agency for women and their ability for increased decision-making power, a reduction in food insecurity and other areas, this can be very tricky to measure. So really fortunate today to get some great perspectives. On and on I could go, but we really want to hear from our panelists. Our discussion will touch on some of the issues women face, but we're really focused primarily on the measurement aspect. I'm joined today by Devin Olmack, the microfinance lead at 60 Decibels, Alejandra Perez-Cohen, the Senior Investment Officer at Microfinance Capital Management, Kara Myers, Program Officer for Gender Data and Evidence at the Bill and Melinda Gates Foundation, and Jack Ngoma, CEO of Microloan Foundation Zambia, who's joining us from Lusaka, Zambia. I'll let each of the panelists introduce themselves, and then we'll start our discussion. Devin, let's start with you.
Hi, everyone. It's so great to be with you today. As Steve mentioned, I lead our financial inclusion team at 60 Decibels, and in particular, the Microfinance Index. A little bit about 60 Decibels. We're a tech-powered impact measurement company. We really view impact measurement through listening to your end clients and customers. So we use a lean data approach to speak directly to the people who use products and services. Particularly what we're going to talk about today is people who are using microfinance and microcredit. We do these over the phone. We have a network of research assistants around the world. That's more than 1,200 people. And our goal is to have these conversations with the end clients and customers and users to really get quality data into the hands of decision makers, like people here today that you are also going to hear from. And so we want to do this basically without minimal hassle or distraction. You know, impact measurement doesn't have to be this really difficult thing or hard to get data. It's really just through conversations, and then how do we look at those aggregate data sets to glean impact and manage that impact at an organizational level. So I'm really excited to talk more about that today. Alejandra, over to
Thank you,
you.
Devin. Hi, everybody. I'm really excited to be part of this panel and to talk about this very exciting topic for us. My name is Alejandra Perez Cohen. I am the lead investment officer for Latin America here at Microvest. And before that, I used to work in IFC for 14 years, also in impact investment in the areas of gender finance, climate, and financial inclusion broadly. So Microvest is an impact asset manager that focuses on financial inclusion. And what do we mean by that? We invest through financial institutions that then on lend to micro entrepreneurs and small companies with the objective of increasing access to finance in developing countries. A little more about Microvest. Actually, this year we're celebrating our 20 years of experience and operations in this, and we had the opportunity to finance over 200 institutions. The funding was close to 1.6 billion, and in 60 countries. So we are very proud to achieve this mark. And also, I'll take this opportunity to say that today is the day that we are launching our new impact framework. So it was really coincidental, but it's great. So we'll be happy to talk about it today. And I'll go on. Cara, please.
Thanks so much, Alejandra. Wonderful to be here today. Really excited to have this discussion. My name is Cara Myers. I'm a program officer at the Bill and Melinda Gates Foundation. I work on the Women's Economic Empowerment team, and really within that focus on gender data and evidence. And it's a relatively new team at the Gates Foundation, and it's been interesting because for our kind of overall strategy, capital writ large is a big piece of it. We recognize that for women to really grow economically, they need to have access to capital. And within this broad capital bucket, credit is a really central pillar for us. And so I've been with the foundation almost 2 years, and we've spent a lot of time really thinking about how we bring that evidence from on credit and how do we measure impact across a range of different financial institutions to increase the effectiveness of different credit products for women, and see how we can move women up kind of have a trajectory of different types of credit products, starting with maybe small group loans and then moving on to larger fit for purpose loans. So it's been really interesting to kind of learn how you can integrate and influence financial institutions, some that have that social impact orientation, but others that are just private sector banks that, maybe are serving women, but don't necessarily have that same type of impact measurement mentality. And so that's something that we're also seeking to influence and to change and try to make that business case for why serving women and measuring impact for them can also be beneficial to the bank. And so I'm really excited to be part of this discussion today and hear thoughts from others. Thanks. I'll pass it over to Jack.
Thank you, Cara. So my name is Jack Ngoma. I'm CEO for Microloan Foundation Zambia. We'll speak a little bit about Microloan Foundation Zambia and what we are doing. So we are a non-deposit microfinance institution that is licensed and that is regulated by the Central Bank of Zambia. We are currently one of the largest social impact microfinance institutions in the country. As of December, we are serving just above 54,000 active women borrowers on our portfolio. We are very big on measuring impact. We have a very special designed model designed to work with women in rural areas. I should say that over 80% of our beneficiaries are all based in rural and hard to reach communities. So we have a unique model on the market. We have over 14 branches in the country and look to expand into more areas in the coming years. Thank you, Steve.
Thanks all. What an unbelievable array of perspectives and experience that are part of this conversation today. I'm really looking forward to learning a lot more over the next 45 minutes or so. Devin, let's start with you and some perspectives from 60 decibels. As you mentioned, 60 Decibel's work is heavily focused on measuring the impact of microfinance institutions and their services across the globe from the perspectives of the clients of those microfinance institutions, which is a really, really unique and difficult task. So I'd love you to start off, and everybody else can certainly jump in. What does it mean to measure impact, and why is that important?
Yeah, I touched on this in my introduction, but we're really trying to get to the heart of like who is using the products and services, and how is it impacting their life, and hearing from their perspective. You know, a lot of our jobs revolve around sometimes sitting in a room, designing a product or service, creating a roadmap, looking at a theory of change, and without really knowing like how is that product or service influencing, impacting this client's life, the customer's life, and what is their real life lived experience of that. And we can have hypotheses and throw them around all the time and think, okay, because a person is getting access to credit, hypothetically their household's impact should improve, their quality of life improves, maybe they're spending more on their child's education, maybe their business income is improving. But we really don't know that and can't test those hypotheses until we're talking to clients and understanding their experience of the credit in their households. And then another thing I'll just add there too is, and I'm so happy for this shift in the sector in this past couple of years, is there was a tendency to use output indicators and kind of use them as proxies. So we look at, specifically when we're talking about like women in microfinance, how many loans did we give to women and what was the value of those loans, and then use it as a proxy to derive impact. But we can actually figure out impact. Like we don't have to use a proxy, just by talking to people and understanding that experience. And then the other thing that I'll add here, and I'll kind of throw it over to Jack after, because I'm curious to hear his perspective from Microloan Zambia. But we at 60 Decibels also use benchmarks to understand impact and impact performance. And so our benchmarks are an aggregate of all of the data we've collected, and they can go down to a regional level within a sector. So we have microfinance benchmarks in sub-Saharan Africa, and you can really use those to gauge your performance from the client's perspective. So if we're talking about like an indicator that we ask of clients, which is around loan terms and understanding. So how clear are their interest rates, their fees, and their terms and conditions of their loan? And it's on a Likert scale of strongly agree to strongly disagree. We look at the percentage of clients who are saying strongly agree to that statement. And let's say for one financial service provider, that's at 50%. That 50% doesn't really mean anything unless you have a comparison to understand, okay, is that good? Is that bad? Like, what's going on with other financial service providers? So when you use our benchmarks, you can compare and understand 50% is pretty low. And so the benchmark actually is around 72%. And that gives you a goalpost for your organization to understand, okay, we're falling a little bit behind on this indicator. Something's happening and our clients aren't understanding our loan terms and conditions. What do we change? What do we improve on? Microloan Foundation Zambia was a top performer in our microfinance index, and like in the top 20% of financial service providers amongst the most important indicators in the microfinance index. So I would love to hear more from Jack about like what this means to really measure impact and its importance at Microloan Foundation.
Thank you, Cara. So you referred to the recent report that was done, and we're so excited with the results from the survey, and we came out as one of the top impact microfinance in Africa, not just in Zambia. I think for us it was so impressive to see that we were considered among the best on the continent and also generally globally with other MFIs that participated. And interestingly, to say this, that although we know, we are a very strong organization on measuring impact, but we were actually quite surprised ourselves to see how strong some of the results came, especially when it came to comparing some of those indicators with alike or similar other institutions that are working in other parts of the continent and also in other parts of the world. But it also gave us an opportunity to look at some of the other areas. And I think there were some of other issues that came out that we did not know. I mean, we speak a lot about programs that we do regards training of clients. We speak a lot about programs we do around savings. But it gave us an opportunity to really think when we saw the results to say, okay, this is one of our key aspects of the program. But then why is it that maybe we've not scored so well in it? And we had to go back on the drawing board and begin to re-strategize more or less, rethink about how we are approaching those. And I think at the bottom of everything, that's what really impact measurement is. It's about giving us the opportunity to think about what we are doing and to redesign where we have to so that we come up with the right tools and approaches that really work for our clients. It's not just about us knowing the numbers, but it is about using the numbers to further benefit the end users, and in this case, majority of our clients who are in the rural areas. So that's what really I can say. I'm hoping to come back and maybe speak a little bit more later on some of the key focus areas that we have been focusing on to measure impact. Steve.
That's great. And I think hopefully you could all see that measurement is only as good as its utility. So you can have the best design system in the world, but if it's not utilized by providers like Jack was describing, then you don't get the true benefit. And that enables people to actually make adjustments based on real data from actual clients. Speaking of questions, I wanted to make sure that everybody knows if you have a question, please put it in the chat. We will be monitoring those and try to get to as many questions as we can. So I'm going to turn to Alejandra Perez-Cohen. As an investor with Microinvest, you take a little bit different lens on measuring impact because you're actually making investments that you want to have returned. So a couple questions. How does your organization, how does Microinvest actually measure impact for the organizations that you're evaluating? How do you use these to guide your actions and make decisions? And we're so lucky this morning that literally an hour and 20 minutes ago, Microinvest announced a new impact measurement framework called the Pyramid of Intentionality. Incredible timing. And we'd love to hear more about all of that. Thank you.
You, Steve. Definitely, we are really proud. Finally, we are launching our new impact framework based on the Pyramid of Intentionality. I would like to congratulate our Director of Impact, Lila Vosco. She was the big driver of this project. Everybody, all the team of Microinvest was worked on that. So it was a big push, but she was definitely the driver. So when we're talking about this, I think it's important to say why we felt that we had to improve our measurement of impact and why we had to work on this project of a new impact framework, because at the end we were measuring impact, but we were doing it, as Devin was saying, very plain vanilla. You know, how many women do receive a loan, what's the amount of the loan, and things like that. And we felt that at this point in time we really needed to step up our game and do a more systematic approach to impact assessment, monitoring, and report, not only for us, but also for our investors. And in this sense, you were talking about this, Devin, that maybe you go and we go and visit some of our end clients of our financial institutions. And for example, the last time that I was in a due diligence and we're visiting a group, a group lending, that it was a group of women, and they were saying something like, "Oh, I've been here in this group and having loans from this institution from 20 years." And then you ask yourself, 20 years and you're still in the same group, the same amount of loan, and so you ask yourself, are you really having an impact? But then, as Devin was saying, there are other areas that we are not looking. For example, what is this person been able to do? Not only on her business, but was she able to send her kids to school, to build her home, to improve the sanitation structure in her home? And that, for example, we didn't have that. We were very plain vanilla. So that was one of the drivers why we decided that we had to implement a new impact framework, so we can really see all aspects of impact, no? And then monitor them and report them, obviously. So that was the idea of why we wanted to do that. But obviously there are many challenges when you try to do that, because one of the things that can happen is that, okay, we are going to get as much data as we can, and then you have but then you have to think, okay, you have to think about the burden that you're putting on the client, on the financial institution, and then decide really what is the important data that you need to have to get really an assessment on impact. So that's what we try to do. So I wanted to talk a little bit about the pyramid of intentionality and how we did it. So in fact, the pyramid of intentionality, you start by setting what are your impact goals. And this is what is going to drive the whole framework, because in our case, our objective is to increase financial inclusion through private debt. So that's what we try to do. So based on that, then we try to set our targets as an institution, how we want to achieve that. And then it goes to how this is going to be included in our investment process. And that goes to your question, Steve. How does that drive your decision of investing? And it goes from the beginning. First, we select which countries we're going to work on, because based on the gap on financing for micro entrepreneurs and SMEs or small companies, then we decide which are our objectives or where do we want really to invest at this time. Once we have that, we start, obviously, we identify which companies or financial institutions that we want to work with. Once we have, for example, one in particular, what we're going to try to see is where do they invest, how they invest, and to see if it really fits the profile of what we try to do as an asset manager, no? If it is something, obviously, we are talking only about impact. Impact is the impact area, and also financial risk, operations, and all that. So it's all combined. So it's not only, we don't focus only on impact, because obviously we have to give some return to our investors. No, so this would be always a combination. But for us, it's very, very important that this institution does have an impact. So once we have selected that, yes, it could be a good candidate, and we go into due diligence, then we'll work with this financial institution first to say what is we do an assessment on environment, social, and governance to see how all these areas, and also how do they do their operation, how do they invest, and all that. So that is part of our assessment, and this will be presented to our committee. And that's how we decide if we do invest in that financial institution or not. And what happens is, obviously, we request those financial institutions to provide us data. And then, so that's where we have always is a little bit of a negotiation. The financial institution will say, "Oh, this is a lot. Yes, but we need it." So we have to work with the financial institution to be very efficient and to really get the data that we need. So once, if finally we decide to invest in that financial institution, then they will be reporting on this, target and data, and that's how, aggregating all this information, we'll be able to assess the impact that we're having. So this is a little bit how we are going to be working. Obviously, this is iterative, so we'll be learning as we do it. We learn, but I think that we are very proud that now we have more tools to assess our impact than before, and not being, I think, and it was important for us to be in line with the best standards in the field. Also, I think it's a little bit complicated because there are many different approaches to assessing, monitoring, and reporting impact. So we try to take from the best, let's say, but I think it's a field. There's many different approaches, so sometimes it's a little complicated to do it and to do that assessment. But I'll let my colleagues that work also on that area comment on that.
Well, it would be very interesting to see over time how your decision-making evolves. And you hit on some points, we'll talk a little bit more about this later, that the more difficult to observe measures may actually be some of the ones that really get at the heart of the impact that people are intending to have. And so on the ground, are you changing the lives of people who are utilizing the services, whether it's training, funding, other types of products and solutions? And as we talk with women in the field, and behind me there's a group of women in Zambia that we met with about a year and a half ago, a lot of the discussions are not necessarily, as you mentioned, Alejandra, around, well, my business is growing 20% and I'm reinvesting and I'm doing this and I'm doing that to grow. A lot of the goals are to create stability in the family life. So there is more opportunity for all, particularly female children, to go to school and get a secondary education. There's a reduction in food insecurity and things that take some of the volatility out of the lives of people who are really living on the edge. And if you can get them into a more stable position, then the opportunity for other improvements in their lives can follow. Whether that's growing the business or not, that may be secondary, but it's creating the stability that is very difficult to find in a lot of these different markets.
Yeah.
Speaking of, Jack, did you have something you want to mention?
I was just going to agree with the point that when we measure impact, sometimes we want to measure it from our perspective, and sometimes we forget to measure impact from actually the perspective of the client. And it's a very, sometimes when we engage, especially when we are talking to the client, what is impact for you as a customer? We sometimes get different answers, and some of the answers almost, you even begin to think, do I even know myself as a practitioner? Do I know what impact is? Because they're kind of like different from what I expect to indicate to them as impact. Sometimes the simple story of a client just telling you to say, look, I just appreciate the fact that I have a stable institution that can provide financial services when I need them is impact enough. Because if I didn't have this service, I would have probably been looking for the services in the informal sector, and I would have different implications as a result of that. And so we get different stories of impact. I know we can define, we have very few parameters that we measure as microloan, but the stories that come from our clients can give us insights into various expectations that our clients have that make so much impact for them. I just wanted to give that as an additional comment to your review.
Absolutely.
If
Thanks very much.
If I could jump in on that, I think it's really interesting, and also something that Alejandra was mentioning, because I think that, when institutions make these loans to women, a lot of times we're making them based on what their business profile looks like. Maybe they have a business plan, or there's some sort of objective from a business perspective. But in practicality, a lot of times these women do not have separate accounts for managing finances for their business and managing finances for their household. And so sometimes you do have that mixture, and women are using their financial resources to achieve a variety of different objectives. A lot of times there's not that clear distinction, and so it can be important to think about those broader set of impact outcomes, because that's where the women are using the resources. I think it's also interesting to see that a lot of times, even for their business purposes, women might be using a loan in different ways in different cycles. So perhaps, one cycle she's using the loan just as like working capital, just to kind of manage the inventory of stock that she has, to kind of keep that smooth. Maybe there's another time she's using it to actually invest in another asset so that she'll be more productive. Or maybe there's another time where she's just really actually using the loan to cover a shock. Maybe one of her, one part of her business, like she needs to replace something in that. And so I think it's also important to recognize that maybe women are taking loans of the same size over and over again, but the usage of those loans might change just depending on what she needs in those moments. And so it's being able to be responsive and as Jack says, like recognize that impact for the women depends on how they want to use the loan, and that might change. It might not be the kind of this constant business growth that you would see if you're just looking at it through one lens.
Excellent point, Kara. And that just really goes to show how important it is to put yourself in the shoes of the person who's utilizing the funds, utilizing the training and whatever other solutions, because it's so important at the levels of what we're talking about to make sure that we're being cognizant that it's not just the classic business metrics. So Jack, as you lead Microloan Zambia, you're working with tens of thousands of women each year. And you mentioned right now you have over 50,000 active clients. We'd love to talk about what are some of the key goals of Microloan Zambia for making a positive and lasting impact on the lives of the women that we serve in Zambia. And what are some of the challenges that you're facing in measuring that impact?
Thank you, Steve. I think the first objective, obviously, is what I already alluded to in the introductory remarks. We are a social impact driven organization, and our number one objective is financial inclusion. We want to reach out into the areas where normally there has been no form of financial services. And I'm happy to say we recently, as already mentioned, did participate in the 60 decibels report. And in that report, one of the findings, which was very interesting, was we realized that we are reaching over 80%. 80% of the women that were talked to were able to access formal financial services for the first time. That was very good, and that was interesting for us. I think in the same survey, we also were able to identify that 90% of those that were getting those services for the first time also indicated that there were no other comparative services that they could get in those areas. That speaks to the fact that we are working in these very rural, remote communities that otherwise would not have any formal financial service. So financial inclusion is one of the key objectives that we have as Microloan Foundation Zambia. We want to reach out into those areas that normally would not have formal financial services. Second, we also are looking at poverty alleviation. And obviously, to do that and to achieve that, we have to look at the clients we are working with, and over a period of time, we want to measure whether they are making progress and whether their levels of incomes are increasing in that period of time. And again, referring to the 60 decibel report, it was encouraging to see that 60% of the women that were interviewed indicated that they have seen a significant improvement in their income level as a result of working with Microloan Foundation in their community. So for us, those were a positive result. We're also looking at improving sustained livelihoods for our clients. We want to see that they're not just getting loans, but overall they have sustained livelihoods. And we use savings, promoting and encouraging savings groups as one of those indicators that we follow very closely. Now, I think you asked me also to talk about the challenges. It is complex. It is very complex, as already indicated. It's not easy to get these and be able to confidently say, oh, we're measuring it well, we are doing it well. And one of the challenges is just to decide how much data you need, how much is enough data to be able to make a good assessment and appreciate the impact that you're working with. That's one challenge. But the second challenge, obviously, we have is in some cases, you would want to work with clients longer for you to really be able to establish the impact that your services have had. And sometimes you don't get that opportunity. You work with a client for a short time and maybe they exit or they move on. And therefore your measurement can be impacted. I think the third one is already what I have already alluded to in my other comment, that just also defining what is impact is another challenge. We have these predefined parameters, but sometimes we also ask ourselves that question over and over. Are we measuring the right things so that we can really demonstrate that we are changing or making a positive impact on the client? I think that would be my response on those few issues, Steve.
And one other thing, Jack, maybe you can just talk about some of the things that how your measurements have evolved, what you're maybe looking at today that maybe 5 or 10 years ago you weren't looking at as closely, some of the things that are in there. And then Devin, would love to certainly have some comments from you with the deep experience that you have in this space.
Thank you, Steve. You have to forgive me because I'll keep referring back to the recent 60 decibels report. And one of the things that came out, which was very interesting, was the concept of agency. We never really looked at it. We measured other areas, but we didn't think about agents. And what came out from this, and this is something that we're really still trying to engage further and develop further and see how we can follow up on this measurement, is that what is the actual impact that the loan will have on the women themselves? And one of the findings that we found very interesting, that women were reporting to say, as a result of the service they're getting, they feel more confident, for example, to make decisions. As a woman, they feel much more able to stand out as leaders, given an opportunity to lead. But these are measures that ideally we didn't track. And that is why I referred to my earlier comment that we had so much insight as a result of the study that was done, that it has given us an opportunity to begin to think about impact in a much wider and broader sense than we initially thought about impact. So women benefit just by feeling that they can make decisions, they can lead, they can make their own choices. And I think that was quite an interesting aspect of the report and something that we are now taking up on board to really think about measuring going forward.
Yeah, I'll just jump in here really quickly. It is, like Jack mentioned, a really tricky balance to ask the right questions, not ask too many questions, not ask too little, and really get to the heart of like, what are we trying to learn here? And then 60 decibels also walks the line of trying to have standardization, because that's what allows us to have those benchmarks and the comparisons, but also allowing for nuance and differences in business models and organizations and financial service providers. So we really, like, when we're taking the opportunity to talk to clients, love to give financial service providers the opportunity to add their own questions that may be of interest to them. But then the microfinance index and all of our work across all of our sectors has gone through an evolution. So the questions that we asked 10 years ago are different than when we first started, are different than the questions that we're asking today. The first iteration of our microfinance index is different than our third, and will be our fourth and our fifth. So in our first iteration, we didn't ask any questions around agency. And these are the questions that Jack is speaking to around confidence, ability to make decisions. Those questions are in line with the 2X initiative for anyone who is familiar with that. And it was a module that financial service providers could elect to add on, or we saw like that different financial service providers were really interested in diving deeper into gender. And so what we did for our second iteration was include that in the core questions that we were asking, so we could have better benchmarks and a better data set to really compare across financial service providers and geographies. And then another question or another interest for financial service providers recently has been more data around client protection. And so last year we had a module that you could add on to do a deep dive into client protection. From that module this year, in the next iteration of the Microfinance Index, we've actually added 2 of those questions to the core survey so that everyone is getting a more comprehensive view on client protection. Just like some examples of the evolution of questions that we ask and data that we get to financial service providers.
Thank you. That's
Steve, just want to provide a comment on what Jack and Devin were saying about data. And it's very interesting because we see that there is a trend, let's say, to standardize the data that we're taking on. And Jack, you were talking about things that are very qualitative, no? That is agency. How do you measure that? How do you report that? Which makes me intrigue me because it's something that we would like to take on in the assessment, but sometimes you don't know how to grasp it, no, how to standardize something that is purely qualitative. I mean, in the sense for an asset manager as Microvest. And for us, I have to say that we have struggled a lot to choose the data that we will follow because there are many actors. There is the investors that want to know more and want to really have a grasp. When you talk about impact, what do you mean? But then also our internal processes. The link with the financial institution that they don't want to have such a burden, and then the clients too. So we have to work with different agents in this, that sometimes you have to find the sweet spot of how much is not too much. And so it's very interesting, Jack, hearing about that, but I'm thinking about how to integrate that in the way we do it.
Yeah, that's a perfect segue into some remarks from Kara. We spoke the other day, Kara, about the challenges that you are trying to address at the Gates Foundation to think about helping traditional financial services institutions incorporate some other what might be perceived as more and probably are more qualitative measures like this. So maybe you can talk about some of the things you're doing, because it is a tricky balance. And we're really excited that you're spending so much energy in that area.
Thanks so much, Steve. Yeah, it's really interesting because hearing this perspective from Jack at Microloan Foundation is, of course, apparent that social impact is front and center for you. This is a key objective. But there are a lot of financial institutions, private banks that are also loaning to women in a lot of these countries. And we have a big focus on East Africa with this. And it's interesting having a conversation with them about really even just trying to have a conversation about theory of change. Like, okay, you're trying to develop this new product to serve women, but what is the problem you're actually addressing? Like, what is this product actually, helping this woman achieve? And so I think that in our conversations so far with these traditional financial institutions, it's really bringing it back to that starting place. A lot of times the financial institutions are oriented around, okay, how are we going to get, what are the number of clients that are going to take this loan and what are the repayment rates going to be? Those are kind of the two metrics that they're really focused on. But if we're trying to shift a little bit to have this also social impact focus and how you're really addressing women's needs and addressing the gender gap in access to capital, we're trying to bring the conversation back to starting with why are your, existing, credit products not really serving women in an optimal way, and how can you redesign them so that women do have higher impact? So, for example, do we need to change the repayment schedule? Is this frequent repayment schedule, is this a constraint for women based on when they're earning their income? How can we adjust that? Or maybe, the loan size needs to be adjusted so that it actually suits what the woman needs to purchase to make that, investment in her business. And so these are some of the things that we're working with the financial institutions to really try to get them to root a little bit more in a theory of change that's grounded in that social impact. We're also trying to see, how, as they develop these new products, how they can, even within their kind of like routine data collection and monitoring and evaluation, how they can build in some of these other KPIs or indicators that would allow us to say, what is the impact of this product on women's income. And so the questions around agency, those are, and control over resources, those are quite challenging, I would say, to measure in kind of a routine data analytics for a financial institution that's really got that private sector focus. But I think that there's still a lot of progress we can make in terms of just seeing how, women are progressing through a financial institution's credit products and moving up the trajectory. One other area of work that we're working a lot on is kind of trying to marry the evidence base and the generation of evidence on what works for credit and for women and financial institutions that are actually in charge of delivering these products. So a lot of the more, really rigorous evidence-based, randomized control trials that are looking at how credit is improving incomes for women or, reducing poverty, that is happening in one field, and then financial institutions are, maybe taking some of that evidence, but they're working in two different areas oftentimes. And so one of the projects that we currently have is actually embedding a research team within a microfinance institution, so that as they generate this rigorous evidence, the financial institution has this vested interest in scaling that and taking that on board and integrating that into their products. And so I think that's another way that we're trying to incentivize greater use of the evidence on what works for women and really embedding that impact measurement from the get-go.
That's great. And that last point is particularly important when you talk about integrating these things into the natural processes of institutions, as opposed to, well, we're going to do our normal business, and then on the side, we'll look at these other things. That transition into having it be a natural part of their business process and their decision-making, speaking about agency, that's women getting agency with the financial institutions, even when they're not there. That's just so critical. And I'm really glad that you're putting so much energy around that, and look forward to learning more about that and certainly helping in any way that we can. We do have one question. Debbie, thanks very much for joining today and asking the question. I think Devin will take this one, being a measurement expert. Obviously, that's what 60 decibels does. And the question is around, how can clients' incomes be measured effectively? Because there are so many variables, whether it's different quality of bookkeeping or seasonality, and what types of things, whether it's consumption or expenditure data, are there surrogates for income? And I know there's lots of different sources, whether it's cell phone data or other things. So very curious, Devin, how 60 decibels answers the question of measuring income.
Yeah. This is a great question and a really difficult one to answer. Obviously, there is the route of RCTs, Kara mentioned, of like really rigorous looking at books, looking at expenditures, looking at costs, looking at revenue, et cetera, et cetera. And that is really time intensive, not only on the research firm, but also on the business owner and the client themselves. And may not necessarily be like a method that they're used to using. And so we really tried to look for, we have asked previously clients, like, what's your, what are your costs? What are your monthly costs? What are your monthly expenditures? What about in the past 6 months? Those estimates we have found are generally not super reliable. And so what we do, because we have, everything basically runs on a Likert scale, except for the open-ended questions for us and the qualitative data. And so we ask a question on business income on a Likert scale of very much increased to got much worse, very much decreased. We have used this as a way for, as a person, has your income very much increased or has it decreased? And for the client themselves to be able to answer that question, just to be able to get some variation in data on the income question as a starting point. From there are not necessarily with our microfinance index, but other financial inclusion projects that we get a little bit more into the variation of costs and profitability beyond like business income changes, but those are for more detailed projects. Kara, I don't know if you have anything else to add here too. I feel like you have some experience.
Yeah, Devin, I'd say that it is something that, the gold standard is going to be that RCT to really, see what are the changes, not just because there's so many things that can influence a woman's increased income, right? Like perhaps it's partly the loan, but maybe there also was, a bumper crop of maize that year. And so she also had, and sometimes it can be hard to differentiate what is driving that impact. And so the gold standard is the RCT. It gives you a comparison group that solid control group. But I think that that's why, as you say, you know, trying to figure out what are some of these proxies, or what are these like self-reported measures, that can also be at least a way for us to say, are we going in the right direction? And that's one of the things that for especially financial institutions that don't necessarily have the capacity to do a full-scale evaluation all the time, that can be very, very useful. One other thing that I think is interesting in measuring is like the agency and the control over resources aspect, because that's something that is oftentimes going to be a self-reported measure. You know, a woman's ability to actually say, yes, I received this loan and I didn't just hand it off to my husband for his business. I'm actually using it for my business. And so those self-reported measures, I think, actually do give a lot of insight. In terms of, you know, and as going back to what Jack says, like, how are our clients themselves actually viewing impact, and their self-reported measures of increased well-being matter a lot.
Thanks for those insights. Here's a question for Jack. How has technology contributed to your increased outreach and impact? And what challenges have you faced regarding digital literacy amongst the women, particularly as you go deeper into rural Zambia?
Well, I think digital transformation has been at the center of our increase in outreach. We adopted digital payment channels in 2017 with assistance from RUFEB and other partners, and we currently are 100% digitalized our at least our loan disbursement processes. And what this has done basically for us is increased areas of outreach. We currently work in areas that previously we were not able to reach. And because in our initial model, we had to somehow find locations that had formal banking services so that they can easily be means for customers to go in a bank and get a loan, which we have paid to the bank to pay to the women. But with mobile money services, where primarily our services are currently being offered, we can reach women anywhere as long as there's a reasonable network for them to be able to receive a payment. And they can equally pay us back using the same channels on mobile money. There are many challenges, of course, and you know, digital literacy levels in rural areas is not really that great. But one of the things we did, again, working with a number of our partners, is develop training programs that have helped our clients to at least understand the basics of what is required, and they can therefore be able to transact. Currently, they can check statements on the phone. They can know, they can see what their balances are. They can send small messages, and we can respond to them. So it has enhanced our services in many ways. We are reaching out to areas that we would have never really been able to reach. We are happy to see that the women themselves are actually adapting to these new technology options, which is a great thing. Initially, there were a lot of questions whether this was actually going to be possible, but we're happy to report a couple of years down the line that actually women are willing to learn, and they have learned, and they're happy with the service. And so we hope that in the next few years, we can continue building on our digital channels. So yeah, it's really enhanced the services that we are providing to women in these rural areas.
Thank you. And I think, again, the last comment you made about the willingness to adopt, there's definitely a trust factor that comes into play, particularly with women using digital tools, lots of reasons. And that training and the ability for people to get to a place where they can trust that the technology they're using and the information they're sharing is actually going to be helpful for them and not hurt them in some way. I think we have time for one or two more questions, and then I'll wrap up. Question here: is there a difference in the methodology or approach of impact measurement for women versus men? I don't know who wants to maybe take that one.
I can start, Kara. It looks like you came off mute too, so maybe hop in. Our approach at 60 Decibels is we use the same questions and survey tool, but our analysis is different. So we segment the data basically to look at different outcomes between women and men to understand the differences between the client experience, their impact, their agency indicators between what women report and what men report. We believe in not a different methodology and tailoring the methodology, but looking at when you ask the same questions, what are the different outcomes that women and men experience? Short and sweet, Kara, I don't know if you have anything to add.
Sure, yeah. I think that we do think about it slightly differently just because we do recognize that there are gender gaps in women's access to credit and then their ability to use that credit for productive purposes. So, there's studies out there that show, loans are dispersed of the same size to men and women, but yet the outcomes you see are quite different. And that's for us to understand why those outcomes are different, we need to dig a little deeper. And I think that's where the contextual factors really play a role in terms of thinking what additional approaches or methodology we might bring in. So for example, in contexts where we know that women's mobility is a big challenge, like women's ability to access markets, women's ability to sell their products outside their homes is more constrained, I think that we will look at, we may add additional modules or we may add additional questions to understand how women's access to that capital maybe alleviated some of those normative constraints. So, if a woman is living in a household where, previously she didn't have access to the capital and she didn't really have much decision-making power over her household's resources, then we might find that there's, that changes once she has access to this loan or she's part of this social group loan network. Those kind of things can change. And we may measure those for women clients where we may not measure them for men, just because you might not have those same normative or contextual factors that are constraining men's ability to use capital in a productive way. And so I think that context really matters. And I think that the questions around agency, mobility, are more pertinent for women than they are for men in most cases. And so we may add a particular focus on that kind of thing.
That's great. Well, thanks so much. We could clearly have this discussion for many hours, but we need to wrap up. In that light, I hope that this discussion will be found informative and left you wanting more. So feel free to reach out to us. We'll be providing, there's links in the chat. And we really are so appreciative of our incredible panelists and to all of you for joining us across the globe. If you'd like to help Microloan Foundation reach more women and provide critically important training and gender-appropriate financial solutions and services, we deeply appreciate your support. There's a link in the chat. Feel free to click and learn more about the organization. We worked with over 150,000 women last year, but there are tens of thousands of people who need our support and really benefit from the services that we provide. We really are very proud of the impact we've made on over 450,000 women's lives. 97% in the 60 decibel study of Microloan Zambia last year, 97% of women working with Microloan Foundation reported an increase in business profits. 98% state that they have an increase in self-confidence. We talked a lot about agency and confidence and decision-making today. Food insecurity has been reduced to a couple of weeks versus 3 months prior to working with Microloan. And 97% of our clients are able to save versus 11% before. And that means that they have a little bit of a slush fund when things inevitably go bump in the night, which they always do. So thank you for joining us. We really appreciate your interest, and hopefully this has been the beginning of a learning journey for you. And I know I certainly have learned a lot in the past hour. Have a great day.